Welcome back everyone, and thank you so much for tuning in to this video. I also want to thank everyone for liking, sharing, and subscribing to this. It really helps a lot, especially for a little channel like me, so please share. I postponed the normal video that I was going to do today because I wanted to do a quick little video answering a question that one of our viewers, Rachel Lambert, asked me yesterday. Her question was, what are my thoughts on drip investing? At first I thought she was messing with me because I thought I kind of made it clear that I've been doing that for the last few years, and that's what got me retired. But then I realized maybe I haven't been specific enough. So drip investing that she's talking about stands for Dividend Reinvestment Plan. It's exactly what I've been doing. What this refers to exactly is just reinvesting the dividends that you get. Rather than living off of them like I am, you're basically just reinvesting as much as you can. Now I do reinvest as much as I can afford, but keep in mind guys, I'm retired and I don't have a pension or anything. I'm literally living off of the dividends from my investments. Most of the time drip investing is done automatically through the broker. There's usually like a button option, like when you buy a stock, you can opt to reinvest the dividends. When you do that, it's basically gonna buy as many shares as possible with those dividends. If it's not enough to buy full shares, it's gonna be basically fractions of a share. For example, one of my favorite monthly paying dividend stocks is STAG Industrials, I think it is, Industries, something like that. I don't know. STAG, S-T-A-G, that's all you need to know. They're REIT again, another real estate investment company that focuses on single tenant industrial properties. STAG pays 12.08 cents per share of every share of stock that you own. So if you buy that stock and you hold it through the X date, which is expiration date, I'll get into that in a whole other video. You'll get put down on record basically as a shareholder that is going to receive that dividend. Now X dates happen every single month with monthly paying dividends and every 3 months with quarterly paying stocks. The nice thing about X dates is actually if you buy the stock and you were to sell it on the X date, you'll still get that dividend. That's a tactic I don't necessarily recommend getting into because then, you know, it takes a lot of maintenance. I'll catch myself doing it sometimes if I have a really big position and I feel like it's overvalued anyway. I might sell it on the X date, you know, just to get a big profit. But for the most part, if you're just saving for the future, you're trying to build that thing up, don't even worry about selling it. You know, you want to keep those dividends rolling in. And the only way to do that is hold on to the stock. So if you don't opt for the automatic distribution or reinvestment of your dividends, those dividends just go straight into your account, into your balance as cash. Now I've never really done automatic reinvesting with any of my brokers. I prefer to get that money and you know, maybe add a new position, or if a stock is pulled back big time, I'll put that money elsewhere. You know, do whatever works best for you. I just like to do it manually. But also keep in mind, I did work nights and I usually had days off working in the food industry. So I was able to watch the market. So if you don't have the ability to do that, it's a moot point. So just do automatic reinvesting if that works best for you. But back to the dividends, depending on what broker you're with, it's like I said, depending on the broker. I don't know the ins and outs of every brokerage, but it can be pretty easy and straightforward to find what the dates are, the X dates, you know, like I said before, the days that you have to hold the stock for in order to get that dividend, and to find out what the distribution amount is and the history. You can see, have they raised their dividend? Have they lowered it? I did mention that one app, Stockmaster. I use it a lot when I'm doing quick research on a stock, or I just want to see how it's doing for the day. Also, there's Realtor.com. Wow. Dividend.com, where you can check the history of dividend payouts on all the publicly traded companies. It's a fantastic website. So the main concept behind drip investing is compound interest, which is interest on top of interest. Actually, I love taking a calculator. I've done this so many times, and just calculate how much that initial investment is going to make you. And even if you don't if you don't buy any more shares, it's cool to see how that's going to grow every month or quarter, depending on the time frame of its distribution. Something else to keep in mind is whenever I mention the annual yield of a stock, as far as what it pays out percentage-wise in form of a dividend, I never include the compound interest, meaning the interest on top of interest. It's always going to be higher if you put that money right back in. That's why the concept of drip has become so popular over the years. Going back to STAG Industries, also known just as STAG, S-T-A-G, they're about $30 a share, a little bit more right now. The institutional owners of these guys are Vanguard, BlackRock, and Invesco, just to name a few. These are some of the really big players as far as institutional owners. And these guys have a lot invested. Like when I say a lot, like, a few $100 million a piece. I like mentioning those names. It makes me feel much more comfortable when I take a position. Another thing about STAG is they pretty much, I don't know what the time frame is, but they've increased their dividend payout every year. I'll make another video about this. Once a company hits 25 years of increasing their payout, or continuing and increasing their payout, they are now known as a Dividend Aristocrat. And there's there are things called Dividend Kings as well. There's only a handful of those companies. I believe that's companies that have increased their payout for over 50 years. These guys pay monthly. It's not a huge yield, but you could almost consider these guys a growth stock, meaning along with the dividend, the company is usually growing pretty well over time. In fact, even during COVID, they did not cut their dividend. Like I said, they don't have the highest yield to live off as far as like a retirement stock, unless you've got a lot of money. But if you're looking to grow a portfolio, this stock is a rock star. Okay guys, let's do a flash contest. It's like a flash flood, but without all the drowning in water. Earlier I mentioned STAG, S-T-A-G. I mentioned their price and their dividend payout and the frequency of that payout. I want you guys to be able to figure out from those numbers what is their dividend yield. Leave your answer in the comments and you may be chosen to be the winner. I'll throw it through my good old random generator and I'll give the winner 10 bucks. I'm gonna cut this thing off in 2 days, so Thursday morning. And with that, I'm gonna leave you guys. Hopefully this video answers a few questions that you guys might have, again, as far as reinvesting the dividends. If not, please leave a comment. I love to hear from you guys. And I do want to thank you guys again for liking these, subscribing, and for sharing. I'm still so small. That's what she said. God, why do I have to go there? What was I saying? Make sure to hit that bell icon, because you never know when I'm going to do a flash contest like this one. See ya!